As we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward.
The other thing, there's a dynamic that's happened in the markets, having been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone.
Ah.
You know,
But isn't that a good thing though? Because you have more liquidity.
It's a very good thing.
Yeah.
It's a very good thing. And, you know, and the fractional shares is given access to markets.
Welcome everyone to the Kendall Report. It is Sunday night and we've got a fair amount to cover. It's not as heavy week. We're actually seeing earnings starting to wind down finally, and I'll go through a bunch of details here. Interesting week last week. Markets, NASDAQ giving back, the Russell giving back. NAS was down 1.9%, and Russell down 1.7%. But we're still up 30.4 on the year, so a fair amount of give back here, about 5.5%, 6% off the highs now on the NASDAQ. Russell's pulled back, only up 9.3, but the S&P is staying very, very solid. And I think that it's important to watch how these different indexes are unfolding here. The NAS has been the big mover, no doubt about it. But I think we're seeing maybe some leadership change that's going to happen, not necessarily with the Russell, but just a more stable, some of these tech stocks are going to start to flatten out. We already saw some pretty good, I guess, a retracement here on Apple. And so there's plenty of things going on NASDAQ that we're going to want to watch. So I made the title of this video tonight, and I don't think it's a popcorn night, but it could end up happening. You know how these rants come out of nowhere. But I think, you know, we're looking at, you know, the big question is the Fed really done? And I am going to sit here and continue to argue and tell you they most likely will raise in September again. And what's interesting about that, if you recall some of the things I talked about in last week's analysis, is I was talking about around the bottoming pattern, or this consolidation I think we're in right now, is going to finish around the second or third week of September. And I think that is going to be the key places to watch. Between now and then, expect volatility, choppiness, no big rallies, no big sell-offs. We could see, and I'll cover this in a minute, we could see down into a mid-43 handle on the S&P. We'll cover all those details here in the technicals in a few minutes. So let's look at the economic stuff that's coming out. I'll probably circle back to some of these things with the Fed here in a minute. But this week, we don't have any news at all coming out tomorrow, so we're operating on sentiment, whatever that is. We do have 205 earnings reports coming out, kind of focused on energy tomorrow. But on Tuesday, we got retail sales. And this whole week, is basically, in my opinion, going to be about retail sales. So we've got Walmart coming out, we've got Home Depot, we've got a whole bunch of retail stuff coming out. I'm going to go back and forth between earnings and reports. So on Tuesday, 160 earnings coming out. Home Depot is one of the big ones, and then we have a ton of retail reports coming out. And so it's kind of focused. It's interesting that retail sales and retail reports on earnings are coming out as well. Wednesday, we got housing starts. They're at 1.45. Last month, I think it was 1.46. It was a little bit lower, and it looks like it's a slight improvement maybe. Same thing with permits, around 1.70. It looks like a plus number. At least that's what markets are expecting for the time being. And then as we come into Thursday, we get the typical claims and continuing claims, 245 on claims, 1.684 was last week's report on continuing. It looked like that was going to tick up, but all of a sudden this labor situation just continues to be very solid. It just doesn't get any traction. Markets are quick to react to anything that looks like the most hyped, I'm doing air quotes here, recession that's never happened yet. It's pretty interesting. Friday, there's no reports. Back to earnings on Wednesday, mostly a kind of a techie type 75 reports coming on Wednesday, 117 on Thursday, retail again on Thursday, and then Friday is kind of industrial-based, Deere and a bunch of others are coming out on Friday. So it looks like to me this week is really more giving a view of the consumer side of the markets, and we'll see what kind of sentiment we get out of that. But for the most part, nothing really big coming out. We had all the big stuff last week. We had CPI, of course, coming in as expected. Then we had PPI coming in a little hotter. And I think it's interesting. So back to the Fed for a minute. I think it's interesting that folks, just based on the CPI number coming in as expected, some of these numbers, that all of a sudden the rate hike is off the table in September. I just think, I'm just going on something. I saw something in Powell's eye that said, you know, we're not going to do every other meeting. That's not what the plan is. So I think I'm kind of sticking they're going to do it. What's the difference, actually, if they are going to raise? What's the difference if they do it in September or skip a meeting? It doesn't really matter. And so I'm still focused on a couple things. So this would be Fed and Treasury related from this standpoint. And one of the things that I'm looking at there is the Treasury. I told you folks, the bank account went dry, so the checking account went dry. They filled it up. They used the short end of the market to fill up the bank account, get it up 600 billion. Everybody's talking about the $1 trillion drawdown, and there was going to be a liquidity crisis. Meanwhile, every auction was met with 3-to-1 demand on each one of these. And so what I told you to watch for, and this is what's next, is the refinancing of that initial, okay, my bank account's full, now I need to stabilize it, borrow money. On the back end, I start borrowing money on the 30s, the 10s, the 5s. We load that up. So my opinion is that supply will probably put some pressure on the back end of the yield curve. And I'll just say it again. I mean, all these retail managers that are out there handling people's money, it goes to the beginning of the year. I was having a conversation with a friend earlier, and it goes to the beginning of the year. These folks have been telling you to buy long treasuries. A good friend of mine is like long TLT, and it's so wrong, it's ridiculous. And they just dig in more, and they're telling you to buy more and more and more, that this lock in these yields. And you know, you folks have been around this channel for a while. If you're new here, you probably haven't heard this. But oh, so I'm getting a bad echo again, am I? Wonderful. I just got a message from somebody said there's an echo, and I don't know why there's an echo. Yeah, I plugged in a mic, so I'm going to go off screen for 1 second. I will fix this in 30 seconds. I'm really sorry about that. It's not even on the screen, but anyway, give me 30 seconds. Here we go. Okay, I am back. We should have no echo. I am really sorry about that. I don't know why this system picks up this other mic when it's not even on the broadcast. Please confirm the echo is gone. Okay, awesome. Sorry about that. That was some good stuff I was just throwing at you, and it broke my cycle of where I was at. So bad news. It's very frustrating. I love and hate Streamlabs. OBS, it's free for a reason, I find. Okay, so getting back into, but I really think that these folks that are telling you to buy these long-term treasuries, I mean, I don't know what the motivation is. I think it's this, and this is what I'm going to go with, is everybody has bought into the inverted yield curve means we're going to have this terrible, nasty recession, and all these bad things are going to happen. Remember the banking crisis, the liquidity crisis. All these people just keep coming up with this stuff. I told you folks, if you want to be a good analyst, just watch the mainstream financial news and fade them. They're always wrong. I mean, it's not like you're going to turn on CNBC and find out how to manage your money. I mean, I always tell everybody, if you watch CNBC, just make sure the sound's off, especially if Kramer's on. So, this is... it's interesting. Bloomberg just as bad. I mean, I think it's even worse. The people that they bring on, everybody has an agenda. I mean, unfortunately, our media is that way right now. Is that everybody has some kind of an agenda, and I don't know what this agenda is. Maybe we'll say the conspiracy is tell everybody to buy long treasuries so that the Treasury can refinance their debt. I don't know it. Anybody that bought these things in the auctions recently are already underwater. And so if you watched, I think a video I did last week, I'm not sure which one now, they all blend together for me, probably you folks too that are here every day. But one of the things that I talked about is that the yield curve, I did a yield curve example, I think it was not last week, but the week before. But what I'm expecting is that long end of the curve to start to pop up a little bit, so there's going to be a steepening of the curve as we go forward, and that pricing is going to be because of this new supply. And we'll see how aggressive they got. They need a lot of money, folks. And I know everybody's always telling me how much debt we have. Like, I don't know, I don't understand. I do understand. I'm just telling you, there is an amazing appetite for treasuries, and maybe even for treasuries, at pushing 410, 425 on the long end. I think we ultimately see 450, maybe 475 on the long end of the market. I don't know if we see 5%. I'll save that. I'll go through some of the longer term aspects. As you know, on Sunday night, I try to get through and do the weekly chart. So at least we set up this week coming. And then at the end of this month, we're only really halfway through here. So at the end of this month, I'll go through and we'll set up, start talking about the quarterly and how the quarter's setting up and all these other things. And you're going to see something interesting here in just a few minutes. I'm going to go through the database. This is the only day of the week that I have a valid database viewpoint. And we're seeing something really interesting, and I'll save it for when I go through it, but it's very, very stable, especially on the intermediate, and we're just not seeing any kind of scary stuff. So you're not going to hear me get super bearish here. I do think there's some potential downside, but I think it's very limited. I've been saying that going back when people were criticizing me when we were trading up and around the 46 handle. I said we're going to come back to the 40. We've done that. We've still got some pressure. We've got a bid in the market tonight. You'll see as I set this up, I think we have a bit of a recovery coming this week. We'll see how far. I'll do all the technicals here in a minute. So apologize again for the echo. I knew exactly what it was, and that's amazing because that mic isn't supposed to even be hooked up. Okay, so let me just look here at a couple things. I went through the earnings. Everything looks like we're ready to go. So I guess in summary, since we had the echo, I'm just going to tell you that the Fed's going to raise rates in September. Okay, they're going to keep it up, and they're not going to quit. I don't think they believe for a minute that the inflation's kicked. I know we saw a 2 handle in the PPI, but I think you're seeing some bids in energy and some other things coming on. So let's go ahead and get into the rest of the stream tonight, and let's dig into the WaveTech database next. All right, let me adjust this screen just a little bit for you. So this is the intermediate view of the database, and I'll talk about the trades that came out for tomorrow morning. But the intermediate database is at 75.06. We only saw 210 buys, 538 sells, so there was some selling coming in, but nothing material. And it's very interesting. I think we stay above 66% on any declines that we see. So those of you using WaveTech or Portfolio Expert, whether you're institutional or you should see probably some pulling back and raising some cash, but I don't see it being material at this stage. And I've shown you that graph several times about how the database works, especially on the intermediate, and that we hit this 75, 72 to 78%, and then it starts to back off. But that just tells you that there's more going forward in the markets itself from the standpoint of what the expectations and forward-looking expectations of the database. So let's go ahead and just real quick and go over to the daily. And you'll see the daily's at 31.66. We saw 661 sells, 163 buys. So there's still some attrition going on here. And I talked to you about two numbers, 28% and 22%. Those are going to be levels to watch. And what I believe is happening here is we're getting a rotation. The short-term database is backed off. It's going to get into this, maybe into a 20%. This may be close to it, especially if we do get a little bit of a pushback or a rally, retracement rally this week. But the bottom line is what we're going to see is a rotation. We're going to have to rebuild these short-term patterns, and then we should start to see some traction come in. And we'll be looking for the typical numbers, getting back above 42%. And I think what we're likely to see is, it looks like everything from my viewpoint, folks, is we're staying in this sideways, very choppy range, maybe depending on the day, the week, a little downside pressure, maybe down into the 43 handle. I see somebody was talking about getting a 44, 45 or something buy. You may get a chance at that, but it may be later in the pattern. But right now, all the database is telling us is that we're in this we started a corrective phase. We're likely to see just an absolute sideways pattern from the standpoint of what the markets are going to do. And like I said, I'm targeting right now, I would say, if you went 4 to 5 weeks out into the future, we get into September, mid to late September, that's where you're going to see this event happen, where we would start to see some traction coming back in and start to see the database on a short-term basis rebuild. We should stay above 62, around 62, 68 on the intermediate. If we break below that, then there's some other things to talk about. And this is what this whole database here is what drives a lot of my sentiment from that standpoint. It's a little bit different just looking at a couple indexes that are heavily weighted. When you start looking at 15,560 stocks, it's a big deal on looking at a much different, I guess, viewpoint than most places. You're going to see the typical retail people. If you're not on this channel, you don't even understand this is happening, and the BS that you've been filled with that only 8 stocks are driving the market is just that. There is a lot of stocks participating, but on an intermediate level, like I was just showing you, I'm going to go back for a second, is the intermediate level, you're looking at 11,680 stocks in trend mode. And so it doesn't look like it wants to go away much. So there is 75% of all the stocks are trending, and this is not going away. This particular side of the database, the intermediate, which if I go to full screen here, you'll see, if I go to the all stats page here in WaveTech, what you'll see here is over on the right hand side is that these typical holding periods on the intermediates average on the optimized, otherwise the best model that trades the stocks, are at 204 trading days. So there's about 255 trading days in a year. And then we're looking at right now, we're only, if we look at average current duration filled, right now there's 69 days. It's about 34% of the expectation of the duration of these trades. So there's still a lot going forward. We don't hit 100%, but we're likely to go at least 70+% of the expected holding periods and the expected returns as well. So right now, and this is an aggregate, you have to realize when you're looking at 15,000 symbols, the average profit is on the optimized weekly is 30% on 15,000 stocks. That's normalized. So you've got stocks that are way better and ones that aren't as good. But you're looking right now, the current average profit is only 5.2. We only have 17% of the profits are fulfilled in this database right now. So there is just a ton looking forward. Okay, so we'll start here with the S&P as always. And what we're looking at here is a nice upward slope here. This is the hourly graph that we're looking at. Looks like algos are suggesting we're going to rally. Of course, you know when we're going to rally to, right? We're going to rally up towards the London Open between, so I think in Pacific time, all my clocks are set to Pacific time. So we're looking at, somewhere right around hour or so before. This seems to be the pattern every day. London is a pretty good turnaround. It looks like what's set up right now. We'll see how the night unfolds. Those of you that have the indicators, if you don't have them, go to kendallreport.com/indicators and get them. If you watch the stream that I did on Friday, that was a pretty interesting stream. So go back and watch that. And if that doesn't convince you, then you don't want to make money. So anyway, the algos here are suggesting that we're going to peak out somewhere around London and maybe trade in lower as we come into tomorrow morning around 7 a.m. Eastern time. It looks like we're starting to see maybe some stability come back into the market. So watch for that type of action. All right, let's go. We're going to do daily and weekly on this. So here's the daily. I talked about Monday was likely to be maybe the final negative day, and you can see the algos, at least on PPM1, looks like it's going to cross and get back above the first derivative, which what that tells us is that we're likely to challenge this 10-period moving average, which is right now 45.15. And that's been an interesting number. If you're an intraday trader, if you're watching some of these highs and the activity, between 45.15 and 45.30 has been a lot of resistance at that point. We'll look at the market grid here in a second, but it looks to me like everything's starting to try to turn back up, which means we should rally back into the pattern, and the absolute peak value that you're going to see in this level is going to be right around, I'm going to call the 45.50, 45.70 is going to be the upper range here, and we'll go through the weekly chart here in just a minute so you can have a better handle on that. But you can see the algo's turning up. Look at the market grid for tomorrow. Looks like S1 44.81. I don't know. That's would be the minimum move. 44.71. It looks like pretty good number. That's S2. R2 45.10. R3 is 45.20. You can see RTX tomorrow is 45.30. So it's narrowed quite a bit. I've been talking about the volatility is narrowing. So the thing we're looking for, the top end of the grid actually is still down. The bottom end is turned up. If we get a positive day tomorrow, we're likely to see the grid turn up and get a little mini channel heading us up towards that mid 45 handle on the upside. I don't see a huge rally, but it's possible. Like I laid out in the news, there's really no material news coming out. The earnings season is all but over. There's still a few companies, but I think market sentiment is going to be pretty muted after last week. We still have a lot of thought to put in the things that came out last week, and I think what we'll see is ultimately further consolidation. I think the range is 40. If you remember, we're probably 44.50. 45.50, maybe a little print above or below those areas, but we're probably stuck in that range. And you can see how the moving averages are configured here on the daily. So let's take a look at the weekly. Weekly, as I've been talking, is still flattening out. We're hanging around that 10-week moving average right now, which is at the moment 44.94. And you can see the algos are suggesting that the weekly is going to come down. And I think somebody talked about a weekly sell signal. This would not necessarily be a weekly sell because the PPM1 is crossed, but it does suggest, and we had to get through the first and second derivatives, so there could be some pressure down below that level, but I would go with the weekly market grid here. The extreme is 44.15. On the downside, upside 45.64. That's what I was setting up as far as the ranges are, I think, going to be really tight because we're still seeing that volatility get crushed right now. And that's likely to hold us in a fairly tight range this week. We don't really have anything to react to. Maybe there's something we don't know about, but what we can see from the calendar and other events from the economic calendar going to the earnings calendar, there's really doesn't appear to be much out there. So I'm expecting this thing to stay in this weekly range. That's your extremes. Most likely you're going to see somewhere around S1, S2, maybe S3, which puts us up in the 45, 46 handle on S3. S2 is at 44.52. So that would be your extreme. I don't think we print down into 44.33, 44.16. But who knows? Maybe there's a funny story coming out that Moody's or Fitch will come up with some bogus deal on the banks or something. Maybe they can generate some emotion. But as we can see things right now, the landscape looking forward looks like we should have be able to stay within that I would just call S2, R2 on the weekly as the extreme ranges for this week. And I'll cover that as we go through the week. All right, so we're going to go top down on the NASDAQ. I'll just stick with the weekly chart, and then we'll come back to that. So it looks like we've got potentially some stabilization here, but if you look, even if I look into right now, the PPM1 is at 0.26. It's still in trend mode. So there's still some probabilities of us staying around this 10-period moving average, which right now is at the 15,351. If you look at the upper end, this is weekly again. So weekly upper end S2 15,321, RTX is 15,502, and 15,416 on R3. So S2, R2 is probably the range on these indexes to watch. And what we're seeing again is the volatility contracting. So, and we do have the same type of pattern that we have on the S&P, where the top market grid number is coming down. The bottom number has upticked. It would take probably a positive week, and doesn't have to be a lot positive, to turn the grid up. And if you can see here, if we look out into that September level I've been talking about 2 or 3 weeks out, we look like a flat, but we still have this angle of attack here on the PPM2 and on this 21 period moving average, still up pretty strong. So if you did see a print down there right now, that's at 15, let me get this number exactly, 14,466. If you saw that number, it'd be a huge buy, but that would put us below the market grid. So that would have to be some crazy spike on something that doesn't look like. Yeah, so I think you're dreaming, Eric. Wake up. That's what everybody thinks. But yeah, so the trend, and we'll go through this, but the trends on the monthly, the quarterly, on the weekly, they're still up. And as far as going to 4,000, good luck with that. I don't see it, but the patterns that are here are going to stabilize. The database is way too long for that to happen. That's a huge hit, by the way. We're 4,500. That's your 10% number. I don't see it, but anyway, the bottom line, you can see stabilization coming in to the patterns. Let's go to the daily. Daily is also trying to turn up here, and it looks like we should start to rally back towards this 10-period moving average. And what we'll see here is that the patterns are suggesting that the algos are suggesting here on the daily, we're going to see some increase, crossover. Maybe on the 16th, we're looking at 3 days of potential crossover. The first derivative on PPM1. PPM2 still got some downward pressure, and that's the highest average in this pattern right now. It's at 15,550. So that, once again, is around those levels I talked about on the weekly chart to watch. S2, R2 are the levels to watch. As far as today goes on the NASDAQ, we're probably looking at the same level, S2, 15,043. And then you're looking at R2, 15,237. We're 15,140 last trade. So just look for that type of action to come in. And it looks to me there's still some downward pressure here on the moving averages, but we should at least trade up toward into the 10-period moving average from that standpoint. So let's go ahead and go on to the Russell here. So it's kind of a broken record, folks. All these indexes look like we should be able to recover just a little bit from last week's selling. And really, last week's selling wasn't as bad as the previous week. We're already starting to see the potential for the database to start to stabilize. I wish that tomorrow when I do the stream that I'd be able to give you those numbers out of the database. But you just get WaveTech for $3.80 a day and you'll have them. The the bottom line is that this pattern is also set up exactly the same way. We're likely to see some little rebound, but there's still some downward pressure. So I would say across the board on all these, there's a possibility of printing below last week's low, but I think it's minimal. If you watch that action, the way we traded on Friday especially, but on Thursday and Friday, there's just the buy the dippers are out there around that mid 44 handle. So that looks like that we're in fairly good shape just to stabilize here for the moment. Yeah, now I just say Chi-Town, Tony, last year when that happened, we had a database that was long under 42%. It was around 25% long. We have a much different configuration here from the standpoint of the last time. So you always have to look back when you're trying to trade in the rear view mirror. Make sure you look back and see if you're on the same road you were on last time. And so we'll see how that all plays out. I'm sorry, I'm laughing because of Eric's comment. Thanks. But yeah, let's go over to the weekly here, and same patterns. I don't have the algos running on this. I have to adjust. Let me do something. I can get this. Let me go to the cash market. We'll get an algo print. Yeah. So on a weekly, same kind of deal here on the Russell, where we're seeing some pullback, but we're at PPM1 on the Russell on a weekly is at 0.49, and it does show that it in the next week or so it's going to come back, but it's still going to be in an upward slope, and that number right now is at 1907. The last trade here, 1925. This is the cash Russell, not the futures. This is not RTY, but this at least gives us a forecast that we can look at on the weekly level. So I think that we should see that angle of attack still is going to be slightly positive. And like I said, we have to wait till next week. I think we have a choppy week and see if I'm right on this, but I think there's not going to be as much volatility. Should be a really good trading week. I'm looking forward to it just from the standpoint, if this volatility is somewhat controlled, you're going to know your risk and where your key points are to buy and sell off of this week. So just know that these numbers are, I think, going to be pretty well defined, and I don't think there's anything that is going to come into the picture unless, like I said, unless the ego trip between Fitch and Moody's comes into play and they start throwing some stuff at the banks, and maybe there's some story they can dig up, but I think it will set up that extreme, whether it's up or down. But if it's down, I think they'll set up the extreme on these weekly charts. All right, now for the fun stuff. We got the treasuries up here, and we'll talk a couple things. I'll probably mix some things together with some of the Fed speak as well. But this is the weekly Treasury 10-year, and we're still seeing this upward slope on the moving averages. They're still being forecast to rise here. We still have Fibonacci's above the market, which are valid as well. And the Fibonacci targets, one has already been met, which is the 401, but 429, we're going to call it 429.9. We're going to call it 430 and 445 are the two upward targets. And this starts to set that tone that I talked about on the opening comments, if you're able to hear it through the echo, is that we're seeing that back end is going to start to get really, I guess, overweighted by the refinancing that's going on with the Treasury. So we'll see how all this plays out. But I think we're going to see higher yields. And I'll show you in a minute. And this is the contrast. The 2-year has a downward slope looking forward. The 10-year has an upward slope, and that's that steepener trade. And I'm still expecting for not a completely flat, but it's possible. I don't expect to see a 5 handle in this 10-year, but I do see the potential for that 450 is definitely the case. So let's go ahead. We're just going to do the weekly here. I'm not sure we need to go into the minutia, but this is the big deal for as we come into this week. So look at those. If you have the indicators, just look at the S1 is 411, S2 is 404, and R2 is 428. So there's that 430 number. So it could get pretty interesting this week, especially if we see any kind of things going on with some of these auctions. So here's the contrast I was just talking about, is that we look at the 2-year, you can see it's flat, and then in the backward, it looks like it's going to go off, and it's just looks like we got a flattening to down on the front end of the curve, at least on the 2-year, and then this 10, 30, and even the 5 is looking like it wants to. That's where they're going to do all the refinancing at, right? So they want to get as long as possible, and why would they want to do that? So it's almost like if you look at the, I think Janet Yellen goes down as the worst Treasury Secretary ever. Grandma Yellen is just, she's just going to go down as the worst. She beats Arthur Burns, which is saying something. Okay, but what we're seeing is just like with the oil situation with selling off the SPR, which I'll talk about, but they tie together here, is that you're seeing the exact wrong things being made. So now they need to refi the debt, and we're refining at 4+, 4.5, 420. So they're going to have to do this. There's no way around it, and so I don't know. Like I said, my expectation at the moment is that the 10-year will probably get up around 450. There might be more in there. Like I said, I'm not believing there's a 5 handle in this, but I do think they're going to keep that thing loaded up enough. And maybe all those people I was trolling early in the stream tonight will end up to maybe be a little bit right, but we're not. It's going to be very difficult, I think, for the back end of the treasuries to get much under 380, 375. That's going to be a tough one. And so my expectations are here is that we'll see the front end of the curve flatten, go sideways, flat, ultimately down, while the back end of the curve steepens. And we'll see if we start to get a little more movement in that area. Maybe I'll bring up and I'll draw in the yield curve so you can see my expectations a little clearer, but I did do that. I don't expect it's going to be much different for a while. All right, speaking of getting everything wrong, the Biden administration, here's another bad trade, is it looks like we still have some upward slope here in crude oil. We still have that angle of attack going on. It looks like everything seems to, it's really interesting, folks. And those of you who've been around the channel for a while know I absolutely love these clustered numbers that happen. And the clustered number that is happening is right around this second, third week of September. So mark your calendar. And I think that is going to be an inflection point. It looks like that's where peak oil prices are going to come into play. It looks like a lot of things are focusing in on that window of time. So, and that will, put us into, the final month of this quarter, which will be even more interesting. And that's also around the time of the Fed meeting. So there's a lot going on. I think, and I didn't mention this, and I'll cover it tomorrow, but I think we're coming into Jackson Hole as well. And that's always a fun event as well. Yeah, and Brad's right. The SPR is nearly empty. I mean, it's like 16 days or something. I mean, it's ridiculous what they've done. So if they have to buy it back, then, we'll see what happens. They are now begging for oil production, which is really kind of funny. This whole situation, folks, is really funny from the what we're seeing here on across the board. Just about every area of government right now is just doing everything just about backwards, the best I can tell. And maybe that's how it's supposed to be. And some guy with orange hair told you so. So anyway, but the bottom line is a lot of these things are going on. I wouldn't put it past Saudi and some of these folks to even cut production more. They're still, with this war going on with Russia, I sure hope they manage to get out of this war and solve this issue. And all the BlackRocks and all these guys are chomping at the bit to rebuild the Ukraine. I mean, this is, oh man, you think money's went into Ukraine now? You ain't seen nothing yet, as they say. So just know that is going to happen as well. So that'll be the next unbelievable moment that we'll have to watch. Okay, so next we'll do gold. Pretty boring story here, actually, folks. There's not really much going on. We do have that upward slope with the 40, this is weekly again, 40-week average. It looks like PPM1 wants to turn up in the next couple of weeks, so we probably trade up into these averages, which are fairly around, let me just give you those numbers right now. 1956 is probably where the resistance is. If we look at the market grid, we maybe could see R2 is 1962, 1970, 1978 is R3, RTX on the downside extreme 1929. This market's going nowhere. Possibly we'll get a little bit of rally back into the 10-period moving average on the weekly, but this is pretty much a dead market. A lot of consolidation going on, and good old Peter Schiff doesn't have much to talk about yet. So maybe if we get a breakout, he can call another top and tell everybody to buy. All right, so we'll do Bitcoin. Bitcoin continues to climb the wall of worry. We've been talking about this for a while. Still got an underlying bid in there. There is, talk about a stable market. And this goes on for weeks on end now. We're looking at now about 6-8 weeks. We did get a downward projection on the Fibonacci tool, but I don't think it's valid. We still have the weekly PPMs trying to turn up, or at least they're in serious trend mode. So PPM1 plus 0.74, PPM2 is a 0.20, and PPM3 is a 0.85. So all of these moving averages are in trend mode and have the characteristics of supporting this market in the pattern, and most likely we'll see the pattern just continue to climb into this sideways to slightly bias to the upside. It looks like that's what we're going to have. So this is Yeah, there's not a lot here either, but it looks like bias to the upside, continue to stay within these range. 28.5 is still the magic number on the downside. That we're just really seeing. Yeah, it's just stable, folks. There's nothing here to see. I don't see any. Let's go to the daily. The others, let's just take a quick look at this. So daily, talk about an unorthodox pattern. Looks like we're trying to turn up, but we do have some downward projections on daily, and you could argue they're valid, but nothing's accelerating here. It's just a really strange pattern. So the fib targets on the downside, 28,856, 28,339, and 28, we'll call it even, 28,000 even. That would be your extremes. But if you look at how narrow that it's, the volatility has narrowed so much, it's ridiculous. Typically, when we get that narrow, there's going to be a move out of this range. Right now, the algos are suggesting it's probably on the upside, but not a lot. So that's the I guess that's really all you can say. We're getting these little volatility bubbles every few days. We got an RTX sell going back on, what was that, on August 8th. So we're just really just seeing this thing consolidate here, and it looks to me, the other thing that you can see here is we have upward fib targets and downward fib targets, and the PPMs, like I said, are pretty flat here. On the PPM2 is negative 0.12, PPM1 is a plus 0.04. These are neutral patterns, and PPM3 is a minus 0.12. So these are all neutral patterns. You can oscillate on either side of these moving averages in this pattern. So I would definitely look at the weekly values and look at where the extremes are and try to guide yourself through those levels. Okay, folks, that'll do it. Sorry for the echo to start. Hopefully you were able to understand that. I will not do what I did. The other time we had an echo, I put a new webcam on the system, and I don't know why the mic's picking up, but it obviously is. As soon as I unplugged it, everything was fine. So thanks again. New week ahead of us. Looking forward to this week because I think it's going to be a great trading week, because I think that the levels are going to be so well defined. I think it's going to be awesome. I'm looking forward to it anyway. So hopefully you folks will have a good day trading. We'll see you same time tomorrow night, 6 p.m. Eastern, and have a good day trading. See you then, folks. Thanks for watching. Appreciate it. Don't forget to get the indicators, kendallreport.com/indicators, and get them. The special pricing's going away very soon, very, very soon. So make sure you get it. All right, folks, have a great evening.
Bye.